Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today I want to talk about a growing disconnect in the economy, because if you only look at the stock market, you'd think everything is fine. The major indices are hovering near all-time highs. Asset prices are elevated, and as we talked about last week, many companies will continue to show strong corporate earnings, some even in the face of declining revenue. They will cost-cut their way to profitability using the productivity gains from artificial intelligence as the mechanism. And yet, underneath the surface, there's lots of warning signs emerging from some of the largest companies in the world. Warning signs that point to a consumer economy under increasing pressure. Now, one of the reasons I pay close attention to companies like Walmart, Lowe's, Kroger, and the service sector PMI reports is that these businesses have real-time visibility into consumer behavior. They're not relying on economic theory. They're watching millions of transactions happen every single day. And increasingly, those signals are flashing yellow and in some cases red. Walmart reported that lower-income consumers remain under pressure, even as higher-income shoppers have started trading down into discount retail. So Walmart's revenue has gone up because more affluent consumers have started shopping at Walmart where they didn't before. When higher-income households begin changing spending habits, it means the pressure is no longer isolated to the bottom of the income ladder. The squeeze is spreading. Walmart also revealed something that I thought was particularly telling. Their customers are buying smaller amounts of gasoline at a time. Think about what that means psychologically. It means households are managing cash flow with much more precision. Instead of filling the tank, they're putting in maybe $20 because that's what the budget allows for the day. Now, it could be the prices spiked. I've been guilty of that behavior too. If gas went up 10 cents overnight, I will put less gas in the tank, hoping to catch a better price later in the week. But Walmart is noticing it and reporting it. At the same time, Lowe's has been reporting continued weakness into big-ticket discretionary purchases. Consumers will still repair what's broken, but larger remodeling projects are increasingly being postponed. The CEO of Lowe's doesn't usually spend that much time on the analyst call where customers are not spending. Again, this is exactly what you'd expect to see in a weakening consumer economy. People delay non-essential spending first. Then there's Kroger, one of the largest grocery chains in the U.S. Kroger has actually been cutting prices in certain categories because customers are resisting higher grocery costs. Now, that's fascinating because grocery inflation has been one of the stickiest components in the economy. When grocery chains begin protecting market share by compressing margins, it tells you that customers are reaching their limit. And remember, consumers absorbed a lot of inflation over the last couple of years, but absorbing is not the same thing as affording. Many households maintain spending by draining savings, by increasing credit card balances, delaying other purchases, or trading down in quality and quantity. But eventually, that reaches a limit, and we're starting to see evidence of that limit. Now let's look at what's happening globally. Europe is absolutely in recession. The service sector there has weakened sharply, in particular in France and Germany. Consumers are cutting back on discretionary services because energy costs are eating into household budgets. Businesses, especially smaller businesses, are responding by reducing hiring. The PMI employment indices have deteriorated significantly, showing the weakest employment readings outside the pandemic period in years. So why does it matter? Business services represent the labor-intensive portion of the economy. We're talking about restaurants, hotel, healthcare, retail, logistics, finance, personal services. These sectors depend heavily on payrolls and consumer spending. And when the service sector stops hiring, it's often an indication that demand expectations are weakening. What's interesting is the slowdown is not showing up uniformly across all data. Some manufacturing sectors have actually appeared stronger recently. Some of that seems to be tied to inventory building rather than healthy underlying demand. Defense spending for sure is up globally. Now, businesses are building stock because they fear future price increases or supply disruptions. But inventory accumulation is temporary, and once inventories rise ahead of demand, production slows and eventually comes to a stop. We've seen this pattern repeatedly throughout economic history. Another important signal is consumer sentiment. University of Michigan Consumer Sentiment Index has weakened sharply, and honestly, that makes sense. They're showing some of the weakest numbers in 70 years. Consumers understand their own financial condition better than economists do. And when wage growth isn't keeping up with expenses, they know when credit card balances are becoming unaffordable. They know when rent, groceries, insurance, gasoline combined consume too much of the paycheck. And increasingly, the core issue appears to be an income problem rather than an inflation problem. If wages were rising, households could absorb higher costs, but many cannot. And when incomes fail to keep pace, the entire economy starts changing behavior. This is turning out to be what is called the K-shaped economy. You have part of the economy looking like it's doing great. That's happening in particular with asset price inflation for the very top of the economic ladder. And for everybody else, it's heading downwards. There's no question in my mind that the economies in North America are in recession, just like they are in Europe. Hasn't been declared officially, but that's only a matter of time. As you think about that, have an awesome rest of your day. Go make some great things happen, and we'll talk to you again tomorrow.